Yo, what's going on, everyone? Welcome back to the channel. It's been a couple days since I went live. So what inspired this live stream today was I actually was looking to trade a setup here. And this setup, it looked good across time frames. So we had like the weekly, it currently went bearish and then made a push up since June 23rd, 2025. It's been moving bullish. So the context was already good, and then the daily time frame you see had just broken out of this area. It was kind of moving sideways in for a while, which I really liked in alignment with what we saw on the weekly, as if price wanted to go higher. So sorry, I'm just gonna set up something on my other screen here, or my iPad. Perfect. Okay, cool. So the daily broke out of this sideways action and then started rising with the MAs, which I also really liked because it showed that the average of price in this area was able to regain the MAs, showing strength. And then as you see, when price pushes up above the moving averages in areas like this, it comes back towards them and then pushes off again. Comes back towards them, then pushes off again. And this is kind of the premise of what I'm actually going to be doing in this video, is I'm going to be looking in depth on how my 1 hour time frame, so not my daily, but my 1 hour time frame usually looks when I take a trade in relationship to the moving averages. Because this trade here, I was actually looking at it. I was looking at it from a 1 hour standpoint, and the moving averages, the 10 moving average was all the way down here. And I was like, okay, well, if I enter inside this area here, there's a chance that price could be too far away from the moving averages and it'll tap me in and then just take me out, which is actually a big reason. Well, one, I actually missed this trade. I wasn't looking at the chart at the time, but I showed up on the charts around like here. And I was thinking that if price on my 1 hour, or sorry, my 10-minute time frame cleared this accumulation, made a pullback, I could enter through that high that formed right there. But the only thing that stopped me from actually entering that, because that actually does happen, I'll play out the price here. So it actually does happen on the last candle of the day here, which I don't even like to really enter on. Unfortunate that it closed like this, because these setups can work where you just enter on the last candle of the day and then all of a sudden next day you wake up and price is gapped all the way up here. Those setups happen, but the reason why I didn't take this setup was going back to the 1 hour and how the moving averages looked at the time of this pullback actually forming. There was just something about the space in between this area here that wasn't sitting well with me, because I know price likes to come back to the moving averages. You see an example of that right here, where price pushes up and then comes back to the moving averages. Price pushes up, comes back to the moving averages. Price pushes up, comes to the moving averages, goes. Price pushes up, goes down to the moving averages, goes. It almost happens everywhere, right? So as I scroll to the left here, I'll get rid of these. As I scroll to the left here, every time you see price make a move above the moving averages and pull back, you see it actually comes right on the 10 or 20 moving averages before it takes off again. I'll keep scrolling. You see it on the downside too. See, you see it here. Big push down, retracement to the 10 moving average, and then pushes back down. It's like a magnet to the price or to the candles. Price likes to come to those averages before taking off again. And right here in this area, if I go back to my daily time frame, you see here price made this push and then comes back to the averages, which I liked. And now I wanted to see that same thing happen on the 1 hour inside this daily pullback in this area. The 1 hour moves bearish, breaks back bullish, then makes this huge range, and then kind of sets up a pullback right around here. And in my head, I'm just thinking, okay, this is kind of far. There's a chance I could enter it and it just takes off up here. But then there's also a chance it moves up a bit and then comes back to these averages that act like a magnet towards price. So what I'm actually going to be doing is we're not going to be looking at charts. Well, we will be looking at charts, but we won't actually be on TradingView. We are actually going to open up all my back tests. So this was me making a description for this YouTube live right here, so enjoy that. But we're going to look at just all my back testing sheets recently for the system, probably like over the past year or so. And we're actually just going to find the winning trades on every single sheet. And then we are going to write what we notice. Maybe how many trades that price does come back to the MAs for. And then we can even note the trades that, you know, don't make it quite to the 10 moving average or the 20 moving average on the 1 hour time frame. But when it makes that shallow pullback, it just ends up going. Because I'm sure there's probably some of those as well. Right? So that's what we're going to be looking at today. Get rid of that. Open this sheet back up. I'm going to drag this to my other screen here. And it's important that we're doing this exercise together because this is what refinement in trading is. When you start off trading, let's say you have like a bowl. So let's draw a bowl. And we're going to say this is soup, okay? Enjoy my drawing of soup. So this is the water in the soup. And in this soup, you have, it starts off with everything. So maybe you have some like cucumbers. Maybe you have like some tomatoes. Maybe you have like some carrots. Maybe you have like some lettuce. Maybe you have some beans. Maybe some corn. Then maybe you have some like steak bites in here. And pretty much when you start off in trading, this is going to act as your system. It's a little bit of everything. And why it starts off this way is because you don't necessarily know what you're looking for exactly. And when you don't know what you're looking for exactly, well, then you get to try a little bit of everything. Hence why there's so many different variables in this bowl of soup that you may end up liking or may not like. And over time, the more you try the soup, right? So over time, the more this is you. I'm going to draw a big spoon here. The more you try the soup, the more you realize the things you do like and the things you don't like. And the things you don't like, well, you're able to remove. So let's say we remove cucumbers and tomatoes and carrots. So in this new bowl of soup down here, we're only left with steak bites, corn, lettuce, and I think that's all. So we've taken a subset of data the data being the soup recipe. And what we did is we do to the soup is a process of elimination. And in that process of elimination, for the soup example, we're finding the ingredients we like and keeping it and getting rid of the stuff we don't like. And trading acts as the exact same way. So our bowl of soup in trading would be our backtesting data, right? And we have to visit or try out or research or look into this backtesting data X amount of times to find out the things we want to subtract or the things we want to add more of. And the things we'll add more of are the things that we find consistent or things that we find consistent in their ability to actually work and play out in a winning trade. And then the things we'll get rid of are the things that we notice that are consistent with stuff in our losing trades. See, that's how simple it is, right? So that's exactly what refinement looks in trading. So I hope you enjoy my little artwork here. Moving on, let's get started. So I'm actually going to start on my most recent one, and I actually think I do have some screenshots already. So I have like 14 screenshots right here. We'll just start off looking at these because why not? So these are where my trades were on the 1 hour, and you see when price makes that push and pulls back, it comes right to the 10 and 20, the sloping 10 and 20. And this trade specifically, the second one, it looks like it was the winner that I actually was meaning to screenshot here. And I mean, the trade looks perfect from a moving average standpoint, right? I like to see my moving averages sloping up, especially when they're coming from a previous area where it dips under, because that shows me money has left the market for that period of time. And then it re-enters the market, sloping the moving averages back up. So over here, I'm just going to put one trade, one where the 1 hour pullback touched at least the 10 MA. And then this would be like out of 1 trades. So I'll keep editing this number and this number. So I'm going to make them bigger. And then that way we'll know the numbers we're supposed to edit. Okay. So cool. That was the first one. That was something else. This was also something else. So let's open this one back up and then we can just scroll through. So this is another one where price comes right down kind of between the 10 and 20 moving averages after a period where it dips under the moving average, where money re-enters, claims the moving averages and makes pullbacks on the averages, where price on a lower time frame inside this area here is creating this model that I'm drawing here or circling here on a lower time frame inside this area here that's allowing me to enter this trade. And that's happening on a rising moving average of a 20 and a 10 on a 10-20. So now I can go back and I can say, okay, Now two trades out of two trades, one where price at least touched the 10 moving average. Let's go back. Next one. This one's clean. This one's clean because the ranges are nice and big. Everything's nice and clear. It's away from like the prior action that recently dipped down from the moving averages. And you'll see it just bounces on the 10 or comes right to the 10, which you see here. This one doesn't touch the 10, but it comes pretty close. Where in comparison, this here, if I compare the two, so here, I'll put this next to each other. Then I'll zoom in on this area here. So we're looking at this area and this area. And there's definitely more space between this last candle and the moving average over here than there was over here. So this is more easier to see to me, just because of how close it comes to the 10 moving average. And you'll see here the moving averages are different colors. So in this picture, before I had my moving average as the darker one as the 10, then the lighter one was the 20. Now it looks like the lighter one's the 10 and the 20 moving average is the darker one. It doesn't really matter. The 10 moving average will usually always be the one in front. So that's what you need to know, because it's taking in the more recent candles. And if price is making a big bullish push, well, then the last 10 candles are probably going to hold a higher average than the last 20 candles. Hence why the 10 moving average is above the 20. Gonna take a drink of water here. So I'm going to go back here. I can now open this up. Okay. 3 trades won. Or at least touch the 10 or the 20. Now I'm going to bring that to the other side, to my other monitor, so you guys won't see me editing those numbers anymore, but we can all look at it over here. So boom. Here's another one. Price dips down, makes big pushes up, comes to at least the 10 moving average, takes off. So I think there's actually 2 winning trades here. There's this one, then there's this one. So I can now say 5 trades out of the 5 trades we looked at, that one so far, have touched the 10 moving average. This one as well. Price comes down, makes a push up, comes to the 10 moving average and takes off. You'll notice that every time price comes under the moving averages, it plays around a little bit. So look at these previous photos. Comes under, plays around a bit, then goes. Comes under, plays around a bit, then goes. Comes under, plays around a lot. This is actually really messy. But if we look at this example here, it comes up, comes under, plays around a bit, then goes back up. So those areas are just consolidation. So we looked at this one. So yes, it does come down and touch the 10 moving average and then takes off. So we've looked at 6 trades so far where not one of the trades that won looked something like this. This one is over here. This one was close. Like when you let the candles play out on the live chart from the trade I missed today or skipped, then after these 3 up candles form, it does get closer, but it's still farther. Still noticeably farther. So this says trades won where the 1 hour pullback touched at least the 10MA. I'm going to put touched slash came very close to. Oh my God, I can't type. It's hard to type with a mic in front of my mouth. These ones here, price makes bullish structure up, fails the moving averages, makes that consolidation range we just spoke about, and then creates pushes up that retrace back to the moving averages before taking off. If you guys notice the pattern of what price is doing in every single trade we've looked at so far, well, then you're noticing a pretty big fact about how charts actually move and how they consolidate before moving once again, or how markets look when they pause, because when markets go up and then they pause, those pauses are consolidation. Now this 1 hour time frame is ugly. I think I remember trading this. I've looked at this one countless times. But this, simply if I saw this today, this market's just like too far back and forth for me. So you see it goes up, comes down, goes up, like weirdly. Goes up, comes down, goes up, comes down. There's just so much back and forth. It's really wicky. But you'll see that even when price does take off, it does come down to the moving averages. I'm not going to record anything here just because it doesn't look like a regular 1 hour time frame to me that I normally would trade. So I don't want to, I guess, alter my data by including something that doesn't look like the other subset of data, because it may just like not mess up the data because it would only be one screenshot. To be honest, it wouldn't really matter whether I added it to the data or not. But I just want to stay consistent with the actual, I guess, pictures that I'm considering in this refinement that I'm potentially making by either allowing my 1 hour to not come down to the moving averages and actually play the ones that look like they're a little bit farther away, like this one, or if I should just have the set in stone rule that price must touch 10 or 20 moving average at least, or come very close to. So that's what we're working on. So this one's super clean again. Just these clean ranges. It doesn't get much more clean than these ranges here. These ranges just tell me that price is strong. There's very little selling. Even in the pullbacks, the candles are really strong. They don't hold a lot of volume. They can't even pull past the 10 moving average, meaning price is moving strong. So this would be a good trade to look at and study, because the best trades look like this. And I know that because I've just looked at charts long enough. The best trades look like this, where they just take off right away. They don't play around near your entry. You don't get a break even on them as soon as you're entered. It might just take like 1 or 2 candles before price just takes off, or it just goes right away. So this was a super clean trade. Go to the next one. Looks like we have a couple winning trades here. Yeah, so we have one that won here, one that won there, one that won there, and then this one doesn't look like it won. So out of these 3 trades, they all come after a period where price went below the moving averages and then reclaims them. So this would be 3 more trades that at least touch or come very close to the 10-20 moving average. So we counted this one already. These 2 to the left, they don't look like winners. But even then, these were break evens it looks like maybe this one was a loser. But this one was definitely a break even. And even on my break even trades, they're getting entered in the same area where the 1 hour comes back to those averages. Like a magnet, it's coming back to those averages because that's the average of price. So if it's going to go anywhere, it's probably going to go to the average of price because it's just going to kind of weigh out the opposite sides of buying and selling. They're going to meet in the middle, and then that area is going to decide whether price gets redemanded or not. If price is above the averages, the only way it can move below the averages is by eventually coming to the averages. It must pass through the averages if price is above the averages, right? That's the only way you can get on the downside of the moving averages. You must come to them and through them if price is failing, or you must come to them and then take off again if price wants to continue. So important notes there. Those weren't winners, so I'm not going to add them to my data here. The same one. This one's clean. Comes down to the 10, takes off. Add that. Then yeah, these ones are two more winners here that were big winners. So you can see where I got entered in the 1 hour on the 1 hour time frame. Price made multiple structure points after each entry on a higher time frame because I'm entering on a 10-minute time frame. So I'm entering in these areas. So when I get involved on a smaller time frame and then price takes off on the higher time frame, well, those are the trades that are going to make for big runners. Because now I'm involved in a higher time frame move, which is what we aim to be in as a day trader, because the higher time frame move is going to allow for bigger upside potential rather than if I'm just scalping the short moves. When you pair those lower time frame entries inside that higher time frame and that entry time frame proves to be right or on your side, then that's what's going to make a lot of gains for your account. Okay. So that was actually all the screenshots here. So it's good we got those out of the way. I'm just going to go into a back testing sheet now right here, and we're going to look at these ones. This is my most recent back test. I'm going to scroll over. These are all my 1 hour screenshots, and then we'll just look to the right here. So whatever one is a winner, I only have 4 winners so far on this sheet. Whatever one is a winner, well, those are the ones we're going to look at. Because I'm not here to find consistency in the losers. I'm here to find consistency in the winners. And then whatever is not happening in the winners, well, then I don't really care about them. I could, if I wanted to, go to my losers and find common characteristics as well. But it works both ways. You look at the losers, you get rid of the consistencies, and you end up with winners. You look at the winners, you keep the consistencies, and you end up with winners. Right? It's kind of how it works. Cool. So let's start with this one. You'll see price makes a big move up, fails the averages, consolidates, pushes up, doesn't make a big trend, only makes a few structure points up. We can consider this like stairs. So it makes a few stair steps up before the stairs go back down. And now in this area here, this trend, it makes multiple steps up. So you have boom, higher low, higher high, higher low, higher high, higher low, and then price fails to put in a higher high and then ultimately fails down just to do the same thing over again. But you see on the entry we got here, price comes right back down to the 10 moving average and the 20, and then takes off. So we can add that to the total. That 13 trades out of 13 trades we've looked at so far look like this, opposed to this. And that's still not to say that a setup with this much space between the averages wouldn't work, because it would work. And this is a very subtle difference. Like, it may even make more sense for me not to even care about a little bit of added space and just treat this as normal. Just treat this as like, okay, there's probably some time frame close by, like the 2-hour time frame, maybe not the 2-hour time frame, maybe like the 30-minute time frame where it's right on the moving averages. And now this trade makes sense from a 30-minute time frame perspective more so than it does for the 1-hour perspective. So always something to consider there. Let's go to the next one. And it's boring, guys. This is super boring. Like, this is extremely boring. Like, just doing this and having to talk through it. I don't mind talking through it, but it's just boring. Like, everything looks the same. I'm just gathering numbers. I'm trying to, you know, make sense of the data through numbers and percentages, just to see if over the long run it makes sense to do something. And I'm already like, what? We've looked at 13 trades, and I already know that, yes, what I'm looking at probably makes sense, and it should be a pretty firm rule that price must come down to at least the 10 moving average or the 20 moving average, or very close to, before I can even take a trade. And I should just eliminate something like this right away. That already makes sense from what we've looked at so far. So hypothetically, I could just stop this video right now and just roll with that thesis. But the more data you have to back up your claim, the longer you look at it and study the data, the more confident you will be. Right? So that was the last one. This is the new one. Clean. Comes down to the 10, bounces off. Doesn't get much better than that. Go to the next trade, the third winner on this recent sheet. And yep, price fails the moving averages, makes a big move up, comes down to the 10, and then takes off. It's beautiful. Beautiful. So it'll actually do this more oftentimes than not. So this looks more like an anomaly situation where price doesn't make that full pullback to at least the 10 moving average before it takes off. Price looks like it does that way less than it just actually coming down to the moving averages and then taking off. So that's an important note as well. I'm actually going to write that down here. Looks like price more often times than not comes to the 10 or very close to, at least on pretty much all of my trades. That's a hypothesis. Let me make sure I'm using that word right. Hypothesis. Yeah, that makes sense. So this is what looks like to be the case. But like I said, the more data I have to look at and the more data I have to prove, these points here, the more my confidence is going to show when I'm live trading. And the only thing I have is myself, my prior knowledge and testing when executing live trades. Because if you don't have that when you're executing live trades, it's all confidence, to be honest. And you go through periods of life, and even on the charts, if we're just talking day trading specifically, where you're more confident at other times, and other times you have like no confidence at all. And the times you have the most confidence when you're live trading or back testing is like, oh my God, I figured it out, right? Everyone's kind of had that as long as you stick with it long enough. But as soon as you get not or lose your confidence, then everything breaks down. You start questioning everything about your system. Does it really work? Am I doing this right? Is this how I normally consider this on the chart? Is something different from the last time? Am I doing something different? I haven't dealt with this situation before, so on and so forth. But the truth is, you already know everything you're doubting. Your confidence is just gone, and your confidence may be gone due to maybe specific habits you have in your own life. Could be anything. Anything that pushes you off track. Yeah, boom, comes right down to the 1020, takes off after a prior move down that failed the moving averages. Clean. Really doesn't get much cleaner. Okay, so we've looked at all of the trades on this one. I'm going to get rid of that. And then we will look at all the winners on this one. Okay. So on this trade, the second one, price does come down and touch the 10, but this one kind of looks a little bit farther away. And I kind of want to copy and paste this over here just to get a better look at it. Can I zoom in on this? I can't zoom in. Can I lock it then zoom in? That's annoying. Okay. Move that. Great picture. Can I just add a page here? I don't want to get rid of this. This is like legendary drawing. Okay, cool. We'll just copy and paste this over here for now. So we have that move down, then we have a big move up. We have that big move down, tries to come up, then comes down again, and makes a big push. Makes a big push. Because on this second candle here, like if you imagine you have this last white candle and then two black candles, on the second black candle, if you were to remove all of this, if you were to do something like this, that actually looks far from the moving averages at the time. But price still takes off, which is important to note, because even though price appeared to be farther away from the moving averages on this trade, which is different than all of the other trades we've actually looked at thus far, at this point in time, the trade still delivers. And that goes back to this trade here today, where price does look kind of far from at least the 10 moving average. And I chose, or really I wasn't confident in the setup because of such. I have now a picture here where the same thing kind of occurred and price takes off. Now, the difference between these two setups is that this range is smaller This range here is like double the size. This range right here compared to this range, it's like double the size. Just gonna throw some labels on this chart just to help my eyes. I mean, this does look like a good setup. It's really strong. One thing it is strong, because look at this massive push. This was like an 18% move. So from our findings, we can say so now we have 17 trades total. And I can say one trade one where the 1 hour pullback looked kind of far from the moving averages out of the 17 trades. Oh, that's my Paul Dermo timer. I think that's what it's called. Something like that. So this is important because it took us 17 trades to look at where we found a setup similar to the one that is the reason why we're even doing this study today. It took us 17 trades to look at from our backtesting data to somewhat find something that looked similar. And that thing that looked similar actually ended up winning. So that's important to know. Let's go to the next one. Okay. So we have that move that kind of goes sideways under the moving average, only under the 10, not the 20 here. Then price makes a move, comes back or close to the 10, makes another move, kind of moves sideways, isn't far from the 10. And the range isn't super big. So this is a short range, where this is a huge range. The other trade was a normal size range. I'd say that's a normal size range. This one's a bit unorthodox. That's a huge move. That is a huge move. So let's write down what I just noticed. So I'm just going to put note. A setup and how far or close away it is from the moving averages may differ and be dependent on the size of the range / move prior to the pullback. I'm actually going to take this and I'm going to add it. Let me see. I'm going to do that. I'm going to go back in here. And then I'm going to grab the other winning trade with this big range. And I'm actually going to put them side by side in here. Oh, shoot. Can I crop it? No. Okay, that was a fail. Sure, I can just zoom in on this, right? Yeah. Is it easier when I'm... Okay, yeah. That's fine. Then I'll just screenshot this one as well, or copy it and then put it in here. Because although the ranges don't come back like super close to the 10 moving averages, this one actually looks better because the range that created this high is much shorter. Where in contrast to this one, oh no, sorry, this one. This is the one I wanted to compare it to. This one's much, much bigger, which is why when this pullback is more shallow, doesn't look as clean. Yeah, Southall Drew. I'm just reviewing some stuff, man. I'm trying to refine my 1 hour or find a refinement because I was hesitant on a trade this morning just due to kind of the 1 hour not making this clean pullback right to the moving averages. And then this ended up making me miss this trade through this high. So my position would have looked something like this. And I'm fine with missing the trade. But I was also even considering entering here. But yeah, this probably, honestly, this entry here was like more my rules. So this would have been my entry, but I was just unsure about this 1 hour pullback. So now what I'm doing is I'm just honing in on what my 1 hour actually looks like on all my previous back tested trades, that is. Yo, what's good, Dream Big? I like the name, man. Dream Big, bro. What's up, man? What you up to? You on charts today? Did you take any trades? How long you been trading for? What's good, man? But yeah, let's I meant to put that in here. So I want to delete this. I want to grab this. Copy and paste that. Got that in there. And then I want to go back here. Copy this. Go back here. You're a lady? That's my bad. That's my bad. I respect female traders. It shows you can I'm in a trade now. USD JPY. What's USD JPY doing? Let's see. USD JPY. I'm gonna assume if you took the trade today, you're in a short based on this recent action. If you can confirm that. Me specifically, this doesn't meet my rules right now. It looked okay before it started failing this. But once it made this big move under the moving averages, it was showing weakness to me. So I wouldn't be trading USD JPY for my system. But I also don't trade Forex. So yeah. But it looks good. It looks like USD JPY wants to continue long here soon. I would expect on USD JPY probably a breakdown like this, consolidation in this area, and then it's going to break up and go. And then this is going to complete structure on the 2-month time frame long term, where the monthly will show like pure accumulation. Yeah, when the weekly fails down, it shouldn't come below this area here. So when the weekly breaks down, it should just come like around here and then go. Yeah, short. Yeah, that was my guess. Do you trade off only technicals? That's my weak point actually, and I'm still cutting winners too early. Got to work on my psychology. Yeah, I mean, to be honest, Southfield Drew, it may not be your psychology. It may just be how confident you are in your current systems. Because you said the weak point is mainly your technicals, but you also say you're still cutting winners too early. So if you're cutting winners too early, why are you cutting winners too early? My first question to you, in your system, do you have like a set rule on either when to move your stop loss to a partial and secure a partial? Do you have a rule where you'll take full profit at XRR? For me, I take full profit at 5RR, but I also have a rule where if price moves to 4RR, then I'll set a partial at 2RR. So there's multiple ways you can manage a position. There's a million ways you can manage a position, Southfield Drew. But the reason you're cutting winners too early is because you don't have a defined rule, or maybe you do, but you're not obeying that rule when you're trading live. Maybe in back testing, you're actually obeying the rule, but as soon as you're risking real capital, you maybe get scared out of your position, you become unconfident, you don't trust your back testing data, and that leads to you closing the position early. But if you have data sheets like this, like the one in front of me, where you have like 200 trades here, another 63 trades here, if you have that data to back up the way you manage a trade, then there's no reason for you to actually go into periods where you're not managing the trade properly, because you'll have this data here now where you'll have your equity curve in front of you from all of your back tested data that shows that as long as you follow the way you're managing your trades right now, which I'm not too sure of, let me know if you actually have a rule you're trying to follow at least. If you have that rule and you're following it in your back testing, but you realize when you're trading live, you kind of throw it out the window, then you need to go back and look at your data and remember what it's producing for you. Because if my system and the way I partial and manage trades is leading me to this, then why would I want to go back and do anything else that I haven't tested? Because this is showing me profitability. I've been taking 80% off the top at 20% profit lately, helping me some this past couple weeks. So I've been taking 80% off the top at 20% profit lately. I don't understand that. I've been taking 80% of, so you're closing 80% of your position when your position's already up 20%? Is that what you're saying? Because if that's true, then you're securing a lot of profit. You're basically telling me that your account, if you're risking 1%, could be up possibly 20% in one trade, and you're taking like 16% off, right? Is 80% of 2016? Yeah, 16. So if that's the way you're managing trades, Southfield Drew, then that's probably pretty profitable. It is. Okay, wow. I'm curious to see what your backtesting data looks like then, because usually people who aim for larger targets in terms of risk to reward, they have a lesser win rate because it's harder to get those runners that go on for, say, 20%, like you're mentioning here. But yeah, it also is harder to, work through the consistency of win losses and break evens and let your data curve play out when you're looking for more so home run trades. But when you do hit one of those home run trades, which Southfield Drew, I'm sure you probably have, it makes up for a lot of those losers. It could make up for a year of losers in break evens, depending on how many trades you've taken, right? So yeah, that's a cool way, or a cool I guess system from a managing perspective. I'm not too sure how you manage your stop loss. Like, are you just keeping your stop loss in one spot and letting the trade run to 20%? Are you possibly taking partials? Maybe it would help you if you added some partials in there, just to allow you some breathing room to not feel like you always have to. Sorry, I got caught off by your next message. Next issue, I marry my trades and watch winners turn into losers. I have so much conviction and end up losing. Yeah, bro. You watch your winners turn into losers. You watch your winners turn into losers. Well, my first question to you is, when you have a winner and it's showing you that it's potentially a winner by maybe showing you initial strength once you enter in a trade, what's your break even rule? Like, how soon are you breaking even? Because for this example here, let me put this into paint here. For this example here, this is a recent trade I've taken where I entered through here and I got 5% off the top. When price reaches 1 RR, so this is 2 RR, so 1 RR somewhere around here, I'm breaking even right away. Meaning my stop loss is no longer down here, it's right here. And if I'm breaking even on a trade like I should be, because the goal of long-term trading is to protect your capital. So when you finally get a trade, or you finally get an entry and that trade shows you initial strength off the top, you should be looking to break even as soon as possible. And let me tell you why, Southfield Drew. The reason you do that is because, and I'm asking you to do this, look back at 15, 20 of your most best recent trades in terms of how far they ran. You will notice the best winners. So the best winners you have will actually validate your entry, enter you in the trade, and almost never come back. Literally almost never come back to your break even or even your exit. I'll show you another one. Now this one comes back after becoming a winner. Let me try and find you a even better one. This is not a bad example. So as soon as price, within these first couple candles of getting me in my trade, I'm already broken even, because I know the best trades aren't going to come back to my entry area, let alone my stop loss area. If I allow a trade to come all the way up here and then all of a sudden come and take me out down here, I was wrong. So why am I allowing myself to hold on to a trade that's telling me I'm wrong? You're breaking the number one rule of being a trader, which is protecting your capital. The goal of trading isn't to be right. It's actually good to be wrong in trading. I'm actually going to show you a video right here that I posted up on my Instagram. I'll hopefully desktop audio is enabled here. So this is my Instagram. Let me just make sure desktop audio is showing. Looks like it is. Listen to this video.
Last night, I'm gonna pop it up on the screen here. Trading is watching an asset and barely getting any opportunity on it. I had one response. I wouldn't say that. It sounds like you've had quite the losing streak yourself there, Brad. Every day trader who has actually been profitable or made it to the level of profitability knows that every trader goes through losing streaks, and the losses, the allowance of yourself to take a loss and move your position from in the market to outside of the market and ultimately protect your capital by having a defined risk on the downside is one of the most biggest reasons why a day trader is allowed to be profitable in the market. The risk is capped on the downside where their upside profit outweighs their risk. I posted a thread last night.
Right. So I pretty much posted a thread, and it was like an unrelated comment someone made, but they were like, oh, it sounds like you're on a losing streak. Well, first off, losing is a part of trading. If you can't lose, then how are you going to win? This is a mathematical game. X amount of trades you're going to win, X amount of trades you're going to break even, and then X amount of trades you're going to lose. Right? I have a 20% win rate on my live trading system here. 44% of the time I lose, and 36% of the time I break even. So if I can't allow myself to lose with capped downside, meaning I know that when I lose, I'm only going to lose 0.5%, 1%, whatever you're risking. And I know that 36% of my trades are going to be a break even anyways, because I'm going to move to break even quick enough so that if a trade does turn around, then I'm going to be protecting my capital. But on the other hand, people are scared to lose and not allowing themselves to move to break even and having themselves stopped out of a trade because they just expect themselves to win and have too much of an ego to take a loss. Right? I recommend this book if you're maybe having trouble with like accepting the psychology of losing. This book's pretty good. Any book by Mark Douglas as well, it's pretty good. I read this, or sorry, I didn't read it. Like I listened to the Audible, probably like once, 1.5 times. This is a good one. Check it out. What is my strategy? Before that, you said if I take 1 to 2 when it gets to 1 to 1, I want to say I move my stop loss to break even. That's a good rule. That's exactly what my rule is to dream big. So when I get to 1 RR, I break even. Because if price is going to run and it's going to be a good trade, by the time price gets to 1 RR anyways, it shouldn't even come back. So if it does come back, then I'm probably wrong. Everyone goes on losing streaks. Got to minimize the losses. Exactly, Self-L Drew. So let's have this be kind of the start of something new in your trading, man. Let's work on your managing, sticking to like the management system you got, not cutting your winners too early. And then don't allow winners to turn into losers, bro. Especially if like they're starting off as, you know, markets that are moving. When you get that initial entry that starts moving, just break even, bro. Go look at your past data, and I promise you'll notice that the best trades won't come back. And I just know that. I know that from looking at a lot of my trades. I know that from looking at a lot of other people's trades. The best trades will just go. Will just go. Will just go. It won't come back. Look, they just go. They just go. Sure, they may come back like later on, but initially the best trades will just go. What's my strategy, Dream Big? The easiest way to probably show you, I have other videos on my channel, but I use kind of like a 4 time frame setup. So if I close this right here, I'll open one of my most recent trades on all 4 screenshots here. So Dream Big, I start on the weekly time frame. So this is my weekly. I wait for the weekly to pretty much make an accumulation by coming under the moving averages and then breaking up. And then once an accumulation and I have a pullback on the weekly, it validates me to drop to my daily time frame where I wait for the exact same thing. So this model right here, where price breaks under the MAs and then reclaims them, I wait for the exact same thing on my daily time frame. So this pocket of action is just this pocket of action. So the daily breaks down, it makes an accumulation break, and then it pauses or makes a pullback on rising averages, where I look for the exact same thing on my 1 hour time frame, which is right here. So I wait for this on my 1 hour time frame. So this is happening right there. where price breaks down, confirms accumulation, makes a pullback on moving averages. And then in this area here, my entry time frame is the 10-minute time frame. So this is my 10-minute time frame where we're looking at now this area here, whereas this is this pullback on the 1 hour time frame. And you see price fail the moving averages, makes a push up, and then I buy stop the first high above the moving averages. And then from that point on, I break even at 1 to 1. When price reaches 4 RR, I move my stop loss to 2 RR. And then when my stop loss is at 2 RR, price is already at 4 RR, I take full profit at 5 RR or let myself get tapped out for 2 RR. My management system's kind of confusing when you hear it just for the first time, but it's all works for me. It's to ensure that if price already like makes it pretty far in terms of 4RR, that if it comes all the way back, instead of taking a loss like Selful Drew said he does sometimes, or break even, then I at least secure 2RR. Yeah, and some of my trades have actually been like that on my live test. So like this one here, I only secured 2RR, and then I think there's another one, yeah, up here. But some of my recent winners, I got my full 5RR. Yeah, let me know if that made sense, Dream Big. And also, guys, if you've got any value, subscribe to the channel. Let's grow together. If you've learned anything or just think I'm an interesting person to talk to on the charts, yeah, hit me with a subscribe. I'm trying real hard to get to 50 subscribers. It helps out the stream. And also, I'm always down to connect with people. This is my Instagram. I've been day trading for 5 years. Before I ever made money in the markets, I lost $130,000. So that was kind of, one of the pills I had to swallow before even getting into the realm of trading or becoming a profitable trader. And then my goal here is to teach the reality of trading. And the reality of trading is sitting at your desk, very bored, waiting for, setups, missing setups, taking losses, and then having one trade make up for your past 10 in the full month, right? No, I got you. I've been trading for about 3 years. I understood. Yeah, man, sweet. Sweet to hear you've been trading, like you said. I love females that trade. It's just different. Like you always hear about like the young crypto bros and all those guys wanting to trade, but when you hear of like a female wanting to trade, it shows that she's like actually locked in, because most females just want to shop and do a lot of other nonsense on social media. So kudos to you, Dream Big. It'd be interesting to learn about your system too. If you have any like screenshots or any links or any like back testing sheets you could show me, I'd be willing to check it out for sure. Yeah, very, very bored. Thanks guys for subscribing, by the way. It means a lot. Yeah, it's so boring. Like, I will show you guys my my live sheet here. So this is my data. This is like the dates of my trades. In January was actually pretty good. I had 6 trades, or I think 5 trades. But February, I've taken no trades so far. Like I have nothing in the second month of the year here. Yeah, that's fact, Selful Drew. Ladies who really trade are locked in. So I've had no trades in February so far. And why have I had no trades? Well, if you look at some of the markets like US 30 or the Qs, they're just moving sideways, if not breaking down. There's nothing to do. I trade stocks mostly. So when the overall market's breaking down, like a lot of things just start failing. And it's like, it's a condition where I can't take trades in, because since like most stocks, it's always like, I think personally it's better to long stocks, because a stock could only ever fall to $0, right? So the Qs have a limited downside. It can only ever fall to $0, which is somewhere around here, but it could go infinite, right? So it's always better to long strong blue chip stocks, because you have limited downside and unlimited upside. It doesn't really matter if you're just like trading like short term, like we probably are, but yeah, it's the reason I usually long stocks. I just feel safer longing stocks. I quit my private banking job 3 years ago. Oh yes, I'd love to have a trading mate, because nobody understands me in my circle / household. That's facts. That's facts. I swear to God, one of the biggest mistakes I did was like tell people I was trying to learn how to trade. And it's something like stupid that I still do. Like someone's like, "Oh, what you been up to?" Or like an old colleague is like, "Oh, what are you doing now?" I was like, "Oh, I'm a trader." They always give you like that smart ass look, like that smirk. They're like, "Oh, oh," and then they automatically associate you with like gambling or just like lazy, or they expect you to be rich because that's all they think trading is. It's actually terrible. So dream big. I'm actually with you with that. The only people you should be talking to about trading are actual traders. I retired from the Navy, then I got laid off from a major government contractor. My wife said, "F it, you finally have time to trade now." Yo, that's actually a sick Southall Drew. To have someone that supports you like that. I kind of have a similar situation. I was in a sales job. I was making six figures for a couple of years, but it was long days, a lot of stress. And my girl now knows I wanted to be a trader. That's like my goal. That's everything I've wanted to do. So she actually encouraged me leaving that job and finding a lesser income position just to free up more time so I could spend more time on the charts. So it's always good to have someone like close to you that supports you, because us three, Southall Drew and Dream Big, we know trading is lonely. You just said it, Southall Drew. Like trading is super lonely. It's literally just you and the charts. And these charts can make you feel a lot of ways, especially when you're in the position where you're still trying to learn the charts. It's hell, right? It's literally feels like you're never going to figure it out. Feels like you don't know what you're doing. You're always comparing yourself to others. You're trying to understand why it's not working for you, but it looks like it's working for others. You're trying everything. And then sooner or later, you feel the fact that time has to play out. And although you're doing a lot of studying, the time factor has to play a part. Dude, supportive women are a superstar, or are a superpower. Oh God. I was thinking to get a low paying job, but I get bored so easily. Yeah. I guess it goes both ways though, Dream Big. Like sometimes people who like don't have to work, like I see this a lot in older people, they will just like go get a basic position somewhere like at a grocery store or like at a restaurant because like they're bored at home and they just literally want to talk to people like for a couple hours in their day, and that's what makes them happy. But for me and you, we may not want anything to do with a job, and maybe that's due to the situation or I guess the place we're at in our lives. Maybe when we're like, I don't know how old you are, but maybe when we're 60, 70 and there's less people around us, then maybe we will want to go, get out there. But I think I'm on the same wavelength as you right now, Dream Big. Same, but my wife won't let me get a job. LOL. Yeah, I mean, whatever is best for your situation, right? Everyone has a different situation. I mean, if you're someone that can, I guess, continue living without working, then that's a pretty good place to be at. If you have someone that can support the household as well, that's also a great place to be at, especially when there's someone that wants to support your goals. I know I'll lose, just don't want to lose bigly. Yeah, I mean, you'll never lose big, right? Bigly. I love how you said bigly, man. You'll never lose big as long as you just set your stop loss. Like the rule is simple. You never want to lose big. Okay, let's break it down. Define your risk. So define your risk. Safest is 0.05 to 0.01. So that should be 0.5, I think. So I even know people who trade like under 0.5% risk. And then the second thing you always do is set your stop loss. Stop loss. If you just do those two things, Southall Drew, you'll never have a problem with losing big. Sure, some mistakes happen sometimes, right? Some mistakes trading live happen, like you might set the wrong price on your stop loss, maybe forget to set a stop loss, you end up exiting the trade a little bit later. Those are accounted for. Your winners will account for that. And those small mistakes you make over a long enough period of time won't even matter. They'll just all play into the data of still showing you a profitable equity curve, right? Profitable equity curve. Happy you have a supportive girlfriend. Yeah. Me too. Me too. Where are you guys from? Let me know where you guys are from. And then also, if you have any questions just on like the charts as well, just keep firing away. I'm just chilling. Just trying to find more refinements for my system. Documenting the journey. Yeah. 100% I'm right. Southall Drew. I'm focused on market structure. I learned from a YouTuber called Adil. Nice. The Bahamas. Wow, lucky. I'm from Canada. It's freezing here. It's probably much more freezing here than in the Bahamas. I assume the Bahamas are only hot. I also have really bad geography. I'm not a geography student. I'm a trader. VA. What's VA stand for? Telling you guys my geography is not good, so don't embarrass me. Virginia. It has to be Virginia. VA state. Virginia. 100%. It's Virginia. Yeah. I'm building a portfolio. I don't options trade, and I'm not really building a portfolio, but I have my own live account. So I just trade my live account. I don't do Forex. I don't have like any funded Forex or futures account. I'm essentially just trying to build a stock account on Webull. I went to school with a couple Canadians. Yeah, man, Canadians are okay. Canadians are all right. Super cool people. All people are cool people, honestly. But dream big. Like, are you 100% comfortable in market structure? Let me know how that's been going for you. Because market structure is kind of like the premise to every chart. I tell people the same thing. I don't know anything but things related to trading. Yeah. Yeah, pretty much. It's like someone will like ask you the most simplest thing, and it's just like, yeah, man, like I have no idea. Like if you were inside my head, it's only candlesticks and patterns and trades and wondering how the hell I'm going to figure it out. That's the only thing in my head. So if you're not like on the same wavelength as me, then your question's like in one ear and out the other, right? That's true. 20 years active duty showed me we're all way more alike than different. Dude, that's crazy how you did it for 20 years, man. Like, good for you. Good for you. Actually, I just met up with my Canadian friend yesterday. She's here for a month. That's sweet. Having friends visit you from like different countries. I wish I had a friend like that. I don't have a lot of friends. I literally have like 4 friends. I'm sure you guys can probably relate in some way. And none of them are, they all live like literally a couple streets away from me in real life. I have no clue what's happening in the real world anymore. I'm consumed by the market. Yeah, me neither. And I don't pay attention to news or anything fundamental. I just trade what's in front of me because that's the only thing you need. A lot of times people try and focus on like so much stuff that doesn't matter. Like, oh, what's the government going to say in the news today and how is it going to affect the markets? Not going to do anything. It's the market's already going to show you what it wants to do before news comes out most of the time. And the news will just act as like a propeller for whatever the market wants to do. So yeah, what I was doing, guys, before we all got talking, which I'm super grateful for, please keep talking, but unless you have to go, no worries, is I'm literally just studying my 1 hour time frame. I'm just seeing on how many trades my 1 hour pullbacks comes to my MAs, because on this trade today, I was kind of thrown off by the fact this setup here at this point in time just looked far from my moving averages. I would love to trade on technicals. Fundamentals gets noisy. Yeah, 100%. Yeah. I mean, if you just want to trade fundamentals, technicals, you can. You don't need fundamentals at all. My mentor, he doesn't use fundamentals at all. And he taught me to not use them either. And everything's been going well for me. So obviously you can do whatever. I'm sure if trading fundamentals works just as well if you get really good at it. I would have no clue though, because it is not my thing. Not my thing. Okay, so this was like a different backtesting sheet, but my 1 hour rules was the same, which is why I'm looking at this subset of data on this refinement. I have 4 friends, same. But yes, I'm comfortable with market structure, but I find myself very impatient sometimes. I'm working on my psychology. You find yourself very impatient. So I'm actually happy you said that. Because when you learn to trade, imagine this as like a time scale. This is like 0, 1 year, 2 year. I think you said you were learning to trade for 3 years. So I'll just extend this to 4 years. 4 years. So pretty much when you're learning to trade and you have 0 knowledge. So let's like say this is like 0 knowledge down here. Then this is like 10 up here for like perfect knowledge. Pretty much when you're learning to trade, you are playing data out for as much data and as quickly as possible. So I kind of worded that terribly, but when you're back testing and looking at data, since you have access to unlimited data, you're able to look at all these setups very, very quickly. The matter of just replaying bars and pressing play, you're able to see how moves have played out, right? And this is where we get our initial understanding from in the market. This is how we get comfortable with market moves, because we're able to say screenshot something like this and look how something developed. But oftentimes what we're not taking in is how much time it took to develop, because we're just able to play these candlesticks as fast as we want, right? And if we were actually going to look at different time elements, then a lot of these moves take a very long time to play out. And when a market's in a bad condition like this, then you have to wait X amount of time in this area for a new trend to begin. So everything when you're learning the process of trading is done in a pretty quick environment, meaning you can just press play and do whatever the heck you want because data is just going to print nonstop for you and you can see how things played out. But when you're on the live markets, there's nothing you can do to speed up time. You literally have to sit there and wait candle by candle until a new trend can confirm itself and price even enters in a trend. So from this point on here, price breaks down and it really doesn't do anything for a whole 61 days up until this point. So you would have had to wait 61 days for this market to enter an environment where it actually started trending, right? So majority of your time learning, which is why I drew this graph here, majority of your time learning, you're actually going to be able to watch a lot of data really, really quickly. And the better you get, you start getting better as time goes on, because remember, 10 is you being perfect. You start getting better and better and better and better and better. And let's say you at least have to be like an 8 to be profitable. So you're getting better, 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 better. And then you reach this state here on year 3, where you're like, okay, perfect. I've done all the back testing. I've made the perfect system. I'm ready to start executing live. But the one thing you have to do in this area right here that you didn't do in all of these areas here is you have to wait now, because you are introduced to the time element of live trading. And the time element of live trading you don't go to it, right? You don't play bars on replay mode and you don't find the trades yourself. You have to wait literally like this and watch one candle every single day play out. And you have to be able to enact or not take any action for as long as this market stays in a non-tradable condition. And then sometimes when price does move into a tradable condition after 20 days, it then moves quickly back into an untradable condition, which puts you back on the sidelines. And then you're here waiting more until you finally get confirmation of a trend. And depending on what time frame you're currently trying to validate, this is a daily time frame. If you're on a weekly time frame, well, then down here, before price makes this huge move up like this, down here, you would have had to wait. You would have had to wait weeks until price confirmed itself back up. 98 days. So yeah, when you find yourself very impatient, it does have a lot to do with your psychology, because now you have to actually wait real life time for certain things in your system to be validated. And then when everything's validated in your system, that's the only time that you'll get a trade. And that one trade may only come after, say, 2 months. And the worst thing about this fact is that oftentimes when you're the one waiting on the sidelines for everything to be met, you see other traders hopping in and out of trades, getting winners, and you actually start experience things like FOMO. You start wondering why you're not getting trades. You get impatient, you overtrade. So yeah, dream big. What you just said actually unravels a large part about trading. And if you can kind of dig into that a little bit more, then it's going to open up, it's going to give you a lot of insight on how regular traders kind of approach the market versus how an actual profitable trader approaches the market, because a profitable trader is ready to wait on the sidelines for weeks and months for something to be met. Where an impatient trader can't even sit out the market a week. They're taking trades every single day because they think more trades, unprofitable traders think more trades equals more money. The amount of trades you're taking has nothing to do with the amount of money. Well, it somewhat does, because you need X amount of trades to allow, your break evens, wins and losses to play out over a duration of time to be able to let compounding effect, right? But more trades does not equal more money necessarily. Oftentimes, less trades and the less amount of time you spend on the chart will actually equate to more profitability. And the traders who think getting more money is associated with more trades often end up forcing things. And whenever you force something in the market, you are but fundamentals help with conviction for me. I took a nice trade on GLW as soon as the new iPhone was announced. I knew it was just a matter of time. I waited for Apple to report the news on sales. I mean, yeah, for sure. I mean, fundamentals could give you that extra bit of confidence you actually need to be able to take a position. Because if I see a chart that's been consolidating forever, then it finally breaks out into a trend and makes a pullback right here. Say big news comes out right here. So big news. Then I'm happy, because price is breaking up out of an accumulation, confirming accumulation, and is making a pullback in a structure point that's making a higher high with a higher low to now potentially make that higher high here. And you're telling me in the pullback they released big news that's bullish? Okay, I'm looking to get positioned in here then. And that doesn't mean that I will get positioned. It doesn't mean that the trade will follow through. It could obviously fail down and nothing happens. But yeah, certain news events, sure, could give you confidence. I find that alerts are so helpful. I don't have to sit and wait at my computer. Alerts are actually a cheat code. I don't use alerts as much as I ever should. I got to be better at using alerts for myself as well, 100%. Because like you said, dream big, they're huge. Oh, never mind. You said you used to, but it's too overwhelming. Well, they might be overwhelming, but let me ask you, if you set one alert per day at a certain time, and that alert helps remind yourself that you actually have to look at the charts at that given time. And since you're looking at the charts, it equates to 10 extra trades a year. And out of those 10 trades, you get 3 or 4 winners. Then would setting an alert, one alert a day, be worth it? I mean, to me, it'd be worth it. It's probably like an extra 10-15%. Oh, not alerts. Using 10,000 indicators are overwhelming. Yeah, I only use moving averages. My charts are actually really clean. I don't even need moving averages if I didn't want to. But yeah, I only use moving averages. My charts are clean. Like, some people have too much stuff on them. I don't use this. I don't know why my volume's on there. That can actually go. I don't even know why that was on, to be honest. But yeah, literally just moving averages. Raw dogging the charts is gangster. That's facts. Yeah, market structure and breaks of structure are really all you need. There's a lot of other concepts Understanding trading is mashing concepts together, but all concepts kind of work together already, right? Like structure and breaks of structure. Breaks of structure just happen as a part of structure, and structure is what creates trends. So all three of those things are related. And then trends can either move up or down, right? So like I said, everything's kind of mashed together, and then how you use different concepts you learn and how you create a rule-based system around it is the only thing that really matters. You can learn trading from whoever you want. As long as they teach you concepts that you abide by, you create rules around those concepts, and you have strict management rules, and you're not doing dumb stuff like over trading and over risking, then you are like 90% ahead of traders. Your charts are clean. Appreciate that, man. I try. I used to always be like, I never really had like a crazy amount of things on my chart, but I remember when I first started trading, like, you know, you guys have seen like this crap before, like demand and support and all that, which it works. I'm not hating on it, but then you have like a bunch of colorful rectangles on your screen here, and that was never me. Past like the first month or two of actual trading, that was just never me. You remember that, eh? A dream big. Oh my god, that's the worst. You know, it's like actually terrifying when you see traders doing this. They're literally just like start drawing like supply and demand lines everywhere, and they'll use that as a reason for price reversing or continuing. Like, it's actually terrifying when I look at charts like that. Guys, if you don't have one of these, go purchase it. It's like I think it's called a Palermo timer. You just twist it and it'll set a timer, and then you could just press start and then it'll like count down. It's good for like focus sessions, any kind of desk work. And since you guys are traders, if you don't have one of these, highly recommend it. Free ad. Yeah, dream big. Appreciate you for hopping in here and having a conversation, and thank you for sharing, you know, some things about your trading. And yeah, I'm looking forward to hearing more from you. Join in. I'm usually live a couple times a week. So yeah, catch you in the next live for sure. You guys were great. I feel like I was just like nonstop talking for forever. Like, I don't even remember what I was doing. Oh yeah, I was showing my artistic skills. That is a pretty good drawing. You know what? I feel like I should screenshot this. I'm just going to save it to my computer. I'll probably never look at it again, but just so I have it, I'm going to trade it, or sorry, save it. Drew, I'm not too sure if you're still here, man. But I think I'm going to wrap it up. I think I'm going to end the live here. We've been live for how long have we been live? It's not even showing me. Okay, weird. I don't even know how long I've been live for. But I think I'm gonna wrap it up, Drew. I appreciate you for coming in, man. Sick to hear some of the stuff you've done in your own life. Like I said to Dream Big, I'm live a couple times a week where I'm just like breaking down charts, back testing, testing stuff from my system like I was kind of doing here. So yeah, feel free to join in whenever. If you want to connect outside of YouTube, hit me with a follow, Daytrader Brad on Instagram. We can connect in the DMs. But other than that, bro, have a good night and look forward to speaking with you again later in the week, hopefully. Peace.